Housing and retail prices dropped in Nairobi and the surrounding counties of Kiambu, Kajiado and Machakos in the last 3 months due to low demand in the wake of the coronavirus pandemic. Now, some property developers are now offering rent holidays and reduced rent prices of up to 30% to retain their existing clients and attract new ones. As our very own Faizal Ahmed reports, the situation being witnessed might persist as long as the Covid-19 pandemic is with us.
Even before the Covid-19 pandemic hit the country, there was an oversupply of homes and office spaces in Nairobi. But after the virus caused an economic fallout, exposing the sector further, leaving many offices and rental apartments empty.
And that has meant that people who are probably living in the high-end market have had to look for more affordable options, either moving houses, where the rent is relatively lower, so they're able to afford that. And that has affected uptake of either the units within the high-end market. We've seen a reduction in uptake in terms of people moving in. The occupancy has been relatively low, and even in the rent. So for the high-end markets, they've tried to lower their rent just to maintain their occupancy.
King's Serenity is one such development. In order to retain existing and new clients, the development has opted to reduce its rent charges by 20%, the main factor being the economic climate that has reduced customer spending due to the reduction in disposable income.
The sector is that we have started issuing discounts as well, so that at least we can be able to accommodate people within their incomes. So over the months, we have seen that the rentals we have been able to give out discounts is between 15 to 20%, depending on the market here.
Sentiments shared by New Superior Homes CEO Shiv Arora, who until his appointment was Site on Investment's Chief Operating Officer.
Business is one that has taken on the challenges that the current coronavirus pandemic has presented itself and put itself out in a more nimble way, one that's able to navigate through difficult times.
According to data from HusConsult, 47% of tenants surveyed asked their landlords for rent discounts of between 25 to 30%, reflecting how many are not spared by the pandemic's wrath. Prices and rent of high-end houses have dropped on reduced demand as expatriates flee Kenya due to Covid-19 in the last 6 months to June.
Because employers are sending more people home, we have redundancies. We also are having people who are working from home. So the demand for rental space has gone down.
We are even giving maybe 3 months rent-free period for especially new clients, so that at least we can be able to cushion them and be able to accommodate them within this period of time, and basically when the client is looking at a long-term lease.
But was there an oversupply of high-end apartments that were out of reach for many Kenyans, and could this be a market correcting itself?
Our situation is an oversupply, not a bubble. And why we expect around this time people are able to absorb. First of all, if we look at the office prices, they've gone low because everyone is looking for tenants. You're having people being given a 6-month break, yeah? You don't pay rent, you just stay in. Just as long as you'll commit to stay probably for another year.
With uncertainties on when the economy is set to fully recover, sector players are now playing safe and are slowly moving away from high-end apartments given the oversupply. Faizal Ahmed, Citizen TV, Nairobi.